Hello and welcome to the Amber Stitt Show. I am your host, Amber Stitt, and today we welcome my friend Richard Simon, co-founder of AZ Lending Experts, for a discussion that I think fits perfectly in the Get Money Smart category of focusing on money for the Pathways of Peak Performance audience. So welcome, Richard.
Thanks for having me. I know we've been planning this for a couple of months now, so it's good to get on and finally have this time where we fit both of our schedules.
I know. It's been kind of crazy. And this is like post-COVID, so it's almost like we can't even say it anymore. The excuse has been used too much, right? So, part of Pathways of Peak Performance is really to get people to focus on being proactive and not reactive. And so before we dive into some of these topics, though, I thought we should share with the audience a little bit about our background because we've known each other for about 20 years, maybe. I think it's almost 20 years. For the audience that doesn't really know me prior to or before the insurance planning phase of my career, before I moved to Arizona, I was from Omaha, Nebraska. When I moved to Arizona, I became a mortgage loan processor, and I worked with a big group of mainly guys, I think it was. But the business partner you have today is one that you've worked with since we all worked together. So I was always working on your guys' cases, and you were loan officers. And so I think that's pretty cool that we can still talk about business, but it's just different now that we're both business owners and we've been through a little bit as far as the market goes. So back in 2000, like early 20s for me, before the 2007, 2008, what do they call it? What's the right word for it? Is it really the mortgage crisis?
Market crash, yeah.
Yeah. So prior to that, we saw that. I transitioned shortly after that to real estate law firms and was in paralegal work, and eventually corporate paralegal work. So for me, going back into the business world and doing more of that insurance planning, we've dealt with the COVID, the last few years just being very interesting until present day. So regardless though of what is happening out there, we always want to be pretty smart about our money moves today based upon our situation. What I like about your approach is that you're not going to, I don't feel like you guys scare based upon rates. It's really custom by your situation and building good habits. And so that's how I approach things. I have a lot of physician clients that get pressure to buy insurance products at certain times of the year. And it's not so much about the rates for them. It's about their health and what do they need and how do we customize it for them. So that being said, I'll pass the mic to you. Let's tell the audience a little bit about your business, how you and your partner work. And I know that you guys do a lot of referral work with other resources too, so that your clients always have enough information at hand. So I'll let you take it away from here.
So got into the business, like you said. I started back in 2003 in the mortgage industry. And then we were working together, I think it was 2004, 5, 6. Something like that.
Yeah.
So
something like
a while back, but been in the business long enough to saw the ups and, the 4, 5, 6, 7 range, and then saw the downs when the market crashed and made it through there and, been just riding slow and steady up until about 2020. And then market just got crazy out here for 2021. And then this year we've seen it's been both up really high, and now we're seeing a reversal, there. So it's been very interesting. As far as the mortgage company, I've owned a couple mortgage companies. This one I started in 2011. So I started it with Scott Roberts, who is my business partner. Known him since way back in college. We both played baseball together at Texas Tech. So it was cool to be able to start this business together. With that, when we started this business, one of our, philosophies is that mortgage is so much more than rate, right? Everyone wants to go out and sell rate. And sure, a great rate is very important. And I think we're uber competitive when it comes to rates, but there's so much more to a mortgage than rate. A mortgage is typically it's the largest investment and largest debt that most people carry, throughout their careers, throughout their life. So it needs to be a big part of them planning for retirement. So a lot of people don't look at it that way. They just think, I'm going to get a mortgage. I'm going to jump in and get a 30-year. But we really take pride in the education piece and showing them that there's so much more to the mortgage, and that it can actually be a tool that you use, and that debt can be a tool that you use to help fund or get to retirement.
Yeah. That's insurance planning too, is we have resources. And so there's different, we'll talk about terms a little bit, mortgage terms, but there's tools and resources. And then with education, we find the right strategy. And even though there's a bunch of tools out there, doesn't mean that you have to use them all. You might mix them up, you might diversify it, but working with a brokerage, just like we are always looking for the best situation for people, and being able to shop is always great. So like for you, you're looking at helping people depending upon debt to income ratios, different things, where I'm also looking at people's family, and you guys do family, looking at family goals, but I'm looking at their health and then how things are playing out as far as the goals go. So I have a lot of physician clients, but they're not all physicians. We have individuals and executives and business owners that are working with us. And so financial planning is always a hot topic. Some of my clients will do their own planning. Some will hire financial planners. Real estate and investing is always going to be a topic people are trying to figure out how do they get into that. So I know that in some other episodes, we'll dive a little bit deeper in the real estate conversation, but Arizona's been a hot market. And it's like that in certain states throughout the nation. But I think the whole nation kind of received that and has been still a little bit, dealing with it. Some had more of a peak. Arizona tends to have more of a peak, I think, just like Nevada and some of these other states. But I'm not an expert in that. So what are you seeing just in general as far as, is there anything that's kind of like interesting right now that's coming about?
Definitely. I mean, it's been a wild year so far in the real estate market. I mean, if you were looking back in January, February, March, it was such a seller's market. I mean, people were still competing. It was who could pay more for a house almost at that time, because people were it was the scarcity mindset, and everyone was like, well, there's not enough inventory. Only way we can get this is to offer way over asking price. And we were just seeing prices go up. But at that same time, interest rates started creeping up, and they started creeping up because of the inflation concerns that we're having. So we've hit this peak where rates went up so high, and they got to a certain point where people started taking a step back saying, wow, they're really questioning the affordability of homes. And what we've seen in Phoenix is, I mean, we saw inventory from, I want to say early April, in a 3-month time frame from early April to July. I mean, the inventory almost tripled. So we were at just over 4,000 homes for sale in our market here in Arizona. And that went from 4,000 to about over 16,000 in a matter of 90 days.
Oh my goodness. Okay. So, and I mean, I think when we were working together, why do I think that rates were maybe, well, dependent, I think a lot of people did interest only. So I have to get, but fixed rates, I think I saw them even with FHA go up to 6. Yep.
So we're right now.
And that wasn't.
Right now, rates are about where they were in 2000. So we've hit, in fact, it was a headline yesterday. We've hit, our rates are as high as they were back in 2008.
But I don't remember prior to the crash, people, I mean, they talked about rates, but not like they are now. We'll talk a little bit more about rates, but okay, so then we're having more inventory. Now people are going, okay, what do I do? So I've seen a lot of physician clients talking about these longer terms. And I'm talking about how long you keep the loan. So normally you hear about the 30-year, 15-year. That's pretty common. But I want to get your opinion on these longer durations. Is that a good habit to be in? I'll just let you take it from there. I don't want to speculate. So I just want to see from your perspective when you might say absolutely not, and maybe green light, go ahead with it.
And it's a great question. And there's been a lot of discussion about longer terms. And the reason, again, is that affordability is coming into question, right? So when you look at longer term mortgages, it can be a great tool for, again, if you're using it to fund retirement, right? So if you have the mindset of, I'm going to, instead of a 30-year now, I want to take a 40-year if a 40 year is available. And that difference might save you $500 a month in payment. Now, as long as someone's not using that to maximize what they can qualify for, and they say, well, I'm just going to qualify for more and spend that $500 on my mortgage, and then I don't have anything left over, that's when it's not good. That's when you don't want to be in that position. But if you can be in a position where you can say, hey, going from a 30 to a 40 year, now I save $500 a month, and I can take that $500 and I can invest that in my retirement, right? I can invest it in different retirement vehicles to help fund that retirement. Then it's a great plan, because now you're making that money grow for you. And typically you're going to earn a rate of return on those investments higher than what you're going to be paying on your mortgage.
I like that. For my purposes with Pathways, we work on money goals based upon personality. And then you have to, for the audience, you really have to be honest with yourself. Are you doing the 40-year for other reasons? Like, I just want that bigger house, but maybe it's not necessary. So, what's finding the middle ground between being practical and then are you going to take that extra money and make it work for you? Because if that's not a good behavior for you, then maybe we have to redesign the thought process. But I don't feel like I've heard that enough about strategies to leave some wiggle room so that you can then fund the next thing. So I think freeing up that cash flow is a great idea.
Yeah, and it's been, so there's been longer term. Some people do interest only as another way that they can do it to free up the cash flow. So there are different methods for doing so. And again, like you mentioned, it really comes down to preference. I mean, I have other clients that they look at that method and they say, no, you know what? I already have a good retirement plan set in place and I want to have no mortgage debt. I don't want to have a mortgage payment when I retire. So they're looking at the opposite and they're saying, well, instead, I want to go to a 15-year. I want to do a 10-year because that fits more my retirement schedule. And then I'll know that when I'm retiring, I don't have a mortgage payment.
Okay, so if you're going to the 15 years, it's still pretty true that you might get a more competitive rate by trimming back the term?
So 30-year rate's kind of the standard. 30 years, what you typically hear and see advertised. 20-year rate gets a little bit better. And then the big break is when you get to a 15-year rate. 15-year rates, it's not set in stone, but you can count on them being about 1% lower than what your 30-year rate would be.
Okay, so that's cool. And I think there is like a method. I don't know that all banks will allow you to do this through the online login system, but can you utilize that 15-year, maybe a 20 or even a 30, but do those duplicate payments? Mm-hmm. You have to manage it. But is there a way to really shave off, even if you go, is there a strategy between the term you select while doing bi-monthly payments? Mm-hmm. I think you know where I'm heading. I'll let you walk people through that.
By doing bi-monthly, there's two strategies. So if you break up your payment and do a bi-monthly payment, you're essentially paying half your mortgage, on the first half, and then 2 weeks later, you're paying the other half. What ends up happening is over the course of the year, you end up making a full extra mortgage payment just because there's that many weeks in the year. So by making that extra payment, in most cases, you're going to cut the term of your mortgage by 6 years. So if you look at the savings there, you're like, okay, 6 years times 12 payments a year times your mortgage payment, you actually save a pretty decent chunk of money in interest. So there's certainly a benefit to that. Again, going back to the two sides to the conversation, the other side of the conversation is when you're making those extra payments, that payment's not earning you interest. It might be saving you interest, but if you took that extra payment and you put it in some sort of an investment vehicle, that starts tomorrow to earn you interest. And then at 26 years or 24 years, when you would have paid it off, that account's grown larger than to those additional payments that you would have made into the mortgage going against the principal. So essentially that would put you further ahead financially. Okay.
So client comes in, it sounds like you're counseling them a bit. Are you really walking through, is this the primary residence? Because this could be any age. So these are young people potentially taking on a lot of debt. So there's different conversations for every person. Do you dive a little bit deeper and then try to figure out, is there a free up of cash flow for retirement or other passive income strategies? Are we trying to figure that out as they're coming to you to maybe even just do a refinance or a purchase? Are you bringing that out for them and breaking that down?
Definitely. It sounds like that's always a part of the conversation, right? Is we want to help educate people and make sure that they're aware of all these options. There's a lot of people that come to us that already have ideas of what they want. And, so we kind of brush on the different options that are available. But again, a lot of people come in with convictions or have their plan that's already in place. And our job is to help get them where they want to go, but also give them the education and the additional knowledge to know that there are other options that may or may not be a good fit for them.
Well, even if it's not a good fit today, maybe if they like it enough, that could be something that they could put in motion at some point in the future. So I like that. I know you're licensed Arizona. Is it Texas too?
No,
I can't remember.
Now, we're licensed in Arizona, only in Arizona. But we do have partnerships with other brokers in our network that are licensed in basically every state.
Okay. Perfect. Yeah, we work nationally. We have a big client base in Arizona, but always wanting to see how you can help them. But people can find your strategies on your YouTube channel. You guys make it fun. You always bring kind of a playbook attitude to the education. So I think that's always great. So people can follow. What's the name of your YouTube channel?
There's AZ Lending Experts LLC, and then there's also Richard Simon Mortgage.
Okay, very good. I think that's a great place to kind of land. We have more episodes, more conversations to have. So I really appreciate it, Richard. I think this is great information. And so looking forward to the next episode. And for the Pathways audience, I always appreciate you being here.
Thanks for having me. It's been a blast, and look forward to doing it again soon.
Thank you for joining us on today's episode of The Amber Stitch Show. For more information about the podcast, books, articles, and more, please visit me at amberstitt.com. Until next week, enjoy your journey at home and at work. Thank you for listening.